Kaspa is sitting at 3 cents right now, and the liquidation data, the Elliott Wave structure, and the on-chain metrics are all pointing in the same direction. If you've been sleeping on this, this video is your wake-up call. Welcome back to Crypto Educate channel. Today we're going deep on Kaspa. I mean really deep. We're covering liquidation maps, Elliott Wave, NUPL, DeFi utility, ecosystem growth, and yes, somebody on X just said Kaspa is going to $1 trillion market cap. We're going to get into all of that. So if you're new here, smash that subscribe button right now and hit the like button before this video is over. It genuinely helps this channel grow and keeps me bringing you this level of analysis for free. You guys really need to keep sharing my videos. That is how we build this community together. Now let's get into it. Let me start with something that most people completely overlook when they're watching price move, the liquidation map. According to Kaspa Daily, the most leveraged long liquidations are sitting at or above the current price of 0.0289, below 0.0284. The long liquidation density thins out to almost nothing. Now, stop and think about what that means for a second. It means the force selling fuel to the downside is basically gone. If price dumps from here, there is no cascade of long liquidations waiting to trigger because those positions have already been wiped out. The pain has already been absorbed. Now, flip to the short side, and this is where it gets genuinely interesting to me. The cumulative short liquidation leverage climbs steeply above 0.030, with heavy 100x and 50x clusters stacked between 0.0301 and 0.0325, peaking near 4 million plus. So what does that mean in plain English? A move up hits a wall of short positions that would be forced to cover into the rally. That is short squeeze fuel. My take on this is a classic asymmetric setup. Limited downside liquidation risk. Meaningful upside squeeze potential if price reclaims 0.030. The market is not positioned for an upside move, which is exactly when upside moves tend to happen. Let me ask you this. Are you positioned for a squeeze, or are you going to watch it happen from the sidelines? Now, let's look at the bigger picture, the weekly chart structure. At Finzin's posted on X and made a very bold statement. His pick for the coming bull run is clearly Kaspa, and he backed it up with a chart. Let me break this down for you the way I see it. The chart presents a completed 5-wave impulse advance into 2024 through early 2025, labeled as Wave 1, peaking near 20 cents and above with all sub-waves clearly detailed. Following that, Kaspa entered a deep corrective Wave 2, unfolding as a complex WXYZ pattern stretching into 2025 through 2026. Price has now consolidated into the lower reversal area near current lows around 3 cents. Here is my analysis on this chart. This is textbook behavior. After a strong bull move in crypto, you almost always see a deep corrective phase before the next major impulse. The fact that this correction is described as normal and deep is important. It does not suggest that Kaspa is broken. It suggests Kaspa is compressing, a spring being loaded. A breakout above the confirmation line around 20 cents to 22 cents would validate the end of Wave 2 and trigger the beginning of Wave 3, historically the strongest wave in any Elliott sequence. The projected upside target according to this chart sits in the 35 cents to 43 cents zone, implying 10 to 14 times gains from current levels. Now I want to be clear, Elliott Wave is not a guarantee. It is a framework. But when the wave structure, the Fibonacci relationships, and the support zones all align like they are here, that is not something you dismiss. What are you watching on the chart right now to confirm this reversal is real? Drop it in the comments. Here is a metric that does not get enough attention in NUPL, or net unrealized profit and loss. According to Daily Kaspa, Kaspa's NUPL metric is holding near 0.30, keeping in the optimism zone above the 0.25 fear threshold. A 1-year chart shows NUPL compressing from 0.75 as KS price has trended downward from higher levels to around 3 cents to 6 cents. Now here's what this tells me personally. Despite the price being down significantly from its highs, the average Kaspa holder is still in a net positive position and is not in a state of panic. That is psychological resilience. When a market stays above the fear line during a prolonged correction, it signals that distribution has not been aggressive. Long-term holders are not dumping. They are waiting. As a high-speed proof-of-work block DAG cryptocurrency, Kaspa's sustained positive NUPL reflects a community with actual conviction, not just hype. And in my experience watching crypto markets, conviction during compression is what separates the coins that come back from the ones that do not. Now let's talk about something that I think is genuinely changing the Kaspa update. Crypto Captain makes a point that I completely agree with. For a long time, being a Kaspa holder meant only 3 things by hold transfer. That was it. Your KS just sat in a wallet doing absolutely nothing for you. That is starting to change. Projects like at AppKaskad are introducing an entirely different experience. You can now borrow against your KS holdings without selling them. You can generate yield while staying exposed to price upside. You can automate strategies through AI-powered tools. My honest opinion on this is the infrastructure layer that every serious blockchain needs before it can graduate from being a speculative asset to being an actual financial ecosystem. Bitcoin had to wait years for this kind of infrastructure. Kaspa is building it now. At the bottom of a correction, which means by the time the next bull cycle hits, the rails are already laid. At White_Pori makes a sharp observation. The real opportunity for Kaspa may not be another price rally. It may be the growth of applications that give the network actual utility. And I have to say, I agree with that completely. Price follows utility. Always has. All right, now let's get to the one that is going to make some of you uncomfortable. At Joong__, a Kaspa maxi with over 4,000 followers states that Kaspa will reach a minimum $1 trillion market cap, citing mass adoption as the key driver. Now let me give you the full honest picture here. As of June 2026, Kaspa's market cap sits at roughly $820 to $880 million with KS price near 3 cents and approximately 27.5 billion coins circulating out of a 28.7 billion max supply. Getting to $1 trillion from here requires a price of roughly $35 per KS. That is a more than 1,000 times move. Do I think it's possible? Yes. Do I think it's guaranteed? Absolutely not. And anyone who tells you is guaranteed is not someone you should be taking financial advice from. Here is what actually needs to happen for Kaspa to even approach that level. First, the Toccata hard fork. This is scheduled for June 2026, and it is critical. It introduces covenants, native tokens through KRC20, ZK opcodes, and Silver script, enabling DeFi, NFTs, and decentralized applications natively on Kaspa. This turns Kaspa from a fast money transfer network into a full smart contract platform. If Toccata delivers, the narrative shifts immediately. Second, écosystème explosion. Kaspa needs developers, decentralized applications, stablecoins, payments integrations, and major exchange listings. The supply cliff arriving in late 2026 when emissions approach near zero is a significant tailwind. It removes consistent sell pressure from miners just as demand would be ramping up if the ecosystem is growing. Third, macro alignment. Bitcoin dominance needs to rotate. Total crypto market cap needs to expand to $10 trillion and beyond, and the narrative around proof-of-work and fair launch blockchains needs to remain strong. Kaspa checks every box on that narrative. So what is my realistic near-term view? Multi-billion-dollar market cap if Toccata delivers. $1 trillion is the moonshot. It requires perfect execution, massive adoption, and a historic bull market. But the direction is right. What catalyst are you most excited about for Kaspa? Tell me below. Now let's zoom out to the broader market, because you cannot look at Kaspa in isolation. Ethereum failed to hold above $2,000 and is declining. A bearish trend line is forming with resistance at $2,000 on the daily chart. Bitcoin declined and settled below the $68,000 pivot zone. XRP also dipped over 5% and is trading below $1.18. From a technical standpoint, Ethereum attempted a break above $2,200 and failed. ETH then broke below the $2,000 support zone and settled below the 100-day simple moving average. Downside targets sit near $1,720, $1,700, and $1,650 as the next key levels. The main support sits near $1,565, which aligns with a 1.236 Fibonacci extension of the prior recovery wave. For any recovery, Ethereum needs to reclaim $2,000 convincingly. A sustained close above that level opens the door to $2,200. My read on this broader market environment: this is compression across the board. We have Bitcoin under pressure, Ethereum failing key levels, and altcoins feeling the weight of that. But here is the thing: Kaspa's liquidation map, on-chain data, and Elliott Wave structure are showing reversal signs even inside this tough macro environment. That relative strength, if it holds, matters a lot. So to bring it all together, Kaspa's liquidation setup is asymmetric. The Elliott Wave correction is approaching its probable end. NUPL is holding in optimism. The ecosystem is developing real DeFi utility through projects like Kasqad. The Toccata fork is a genuine inflection point. And yes, the path to $1 trillion exists, even if it requires everything to go right. This is one of the most compelling setups I've seen in a long time, and I want you to understand it fully. So you guys really need to keep sharing my videos. Every share brings in someone who needs to hear this analysis. That if you made it this far, you already know more about Kaspa than 90% of the people buying it. Now hit that like button, subscribe if you have not already, and go check out the other videos on this channel. I cover these kinds of deep dives regularly, and you do not want to miss what is coming next. Thank you for watching Crypto Educate. I genuinely appreciate every single one of you who tunes in, engages, and shares this content. See you in the next one. This video does not constitute financial advice or a recommendation and should not be treated as such. Always seek independent financial guidance from a qualified and regulated professional before making any investment decisions.